My name is Russ Sommers. I'm a principal at Baker Tilly. I lead our New York risk advisory practice. So that means all things internal audit, internal controls, IT, cybersecurity. My specialization is in financial services. The firm as a whole, Baker Tilly is a top 10 CPA firm, accounting and advisory firm, really doing all things assurance, tax, and consulting across a variety of industries. I mean, essentially all industries, but financial services, higher education, commercial, manufacturing, distribution, retail, real estate, and I can go on and on.
Focusing on banks and financial services, what's keeping CEOs up at night today, or tonight, or tomorrow night?
Yeah, I mean, I think there's a lot of things, but I'll break it down in the three that I think are the most poignant. First and foremost is still cybersecurity. Cybersecurity has been a top risk, continues to be a top risk for financial institutions, both making sure that they have an effective cybersecurity program, that they're ready for the next attack, understanding that bad actors are continuing to get better at what they do, and that some of the new technology that banks are able to use, that same technology is enabling bad actors to help enhance their capabilities in attacking banks. So that's one. Two is emerging regulation and or the impact of a new administration. Just understanding that with change becomes change. The regulatory environment could change. There could be programs that have an impact on the economy one way or the other, and trying to look around the corner and understand how are these changes going to impact them. And then the third is back to the emerging technology. We have the ability to use AI, generative AI, and a lot of technologies that are built off those platforms. And how do you transform the bank's operating model to be able to leverage those technologies, but do so in a safe way that protects consumer information and also facilitates augmented decision making?
So on that note then, and specifically talking about technology, what are the most interesting things that you are seeing right now the banks are working on with regards to innovation and technology?
I think the amount of money that's going into AI and the ability to harness data that's inside of a bank and turn that data into usable information and then be able to make data-driven decisions using that information is going to be critical. When we think about the amount of data, they measure data now in zettabytes, which is a measure of data that folks weren't even familiar with a few years ago. I think in 2010 there was maybe 2 zettabytes of data in all of business, and now there's over 200. The rate at which we aggregate data is increasing exponentially, which means the rate at which we can use data to make better decisions is also increasing. Now, it's just a matter of finding the right tooling and doing so, again, in a responsible way that protects the consumer, but also helps you augment your decision-making internally. I think that's quintessentially going to be the thing that changes banking.
And like double clicking on that then, what's the most near-term kind of practical outcome of some of the innovation work that's happening right now? Do you have any specific, maybe a case study or an example that you have seen out there in public?
I've seen a lot of automated decision-making type tools, leveraging data to say, hey, here are our guidelines. How do we apply our guidelines? How do we stress test certain things? And be able to facilitate that decision-making to not replace people, but give them better data to make decisions, still involving humans and that level of expertise, but to be able to support them with a much better platform that brings them further along in their decision-making processes. So whether that be lending, whether that be transaction monitoring, there's a lot of different use cases for it. But I think there's a lot of fintech companies and technology companies that are servicing financial services that are exploring that technology and how best they can utilize it, and then how they best use it to serve the market.
So this might be another take on a similar question we just discussed, but where do you see the biggest inefficiencies today, like glaring issues within banks?
Sure. So the biggest inefficiency is tech debt. So a lot of institutions are fairly old. Right? They've developed over years and years, and they've aggregated technologies. And what happens when you continue to do that and continue to bolt on new technologies, if you use those dated technologies that you have, because that's the best way you know how to work, you still carry those with you. And you have to, at some point, figure out where you're trying to get to from a strategy perspective, how your current technology stack facilitates that, and what you need to do to get from today to tomorrow.
So thinking about the people working within these financial institutions, you meet a lot of them, and you must see some of them are being more efficient and effective at bringing about change than others, and maybe they're slowed down by legacy tech, as you mentioned. But what are the characteristics or the things that connect the most successful change agents or innovators within financial services today?
Sure. So the most important part is that technology has a seat at the table. It's great to define a strategy and talk about where you're going to go, but if you don't understand how you can effectively get there, you're going to have a challenge. So making sure that you have both information technology that builds the system and helps support it, as well as information security, understanding how to best protect data. And now with the emergence of AI, generative AI, and the leverage of data at the level it is, having a chief data officer, understanding what are the business needs and data needs, and getting all three of those aspects of information technology together to align on how you actually execute your strategic objectives are going to be critical, because without the input from those three stakeholders, you're not going to be able to effectuate changes as efficiently as you want to.
And you mentioned fintechs earlier, and I presume some of the challenges the banks are facing can potentially be solved by collaborating or working with a fintech. Do you get involved in projects where banks are trying to collaborate with fintechs? Have you seen examples of where this has been done successfully, or where do you think the most opportunities are for those types of solutions or partnerships?
Yeah, so I mean, fintechs is a big word. It could mean new emerging technologies. It could mean services. Been involved in clients that are doing both. And I think the important part first is understanding expectations and saying, what are we trying to accomplish long term? Every new organization wants to tell you how they're going to fix your problems, how they're going to effectuate change in your organization. I think first things first is making sure that that change aligns with where your strategy is going. Second is understanding what's the timeline, what's the actual net benefit, like how much effort, time, resources are we going to have to put in, how much time, effort, resources are we going to save by implementing, what's our potential payback period, how is this going to make us efficient, how is this going to enable our strategy. Because look, unspoken expectations are just premeditated resentments, so making sure that you get that out up front and align on what we're trying to accomplish and be able to try and troubleshoot downstream and say, hey, if this starts to go wrong, what can we do to fix it, and how are we going to mitigate that in the planning process as opposed to waiting for it to happen?
That makes a lot of sense. But can you be more specific with regards to, I'm thinking about emerging tech companies or fintechs.
Sure.
In terms of them collaborating with banks, have you seen where a good example or a kind of best in class, or that you kind of think to as like, that's, if everyone could do that, we would have more successful financial services and fintech partnerships?
Sure. I won't talk about specific companies, but I'll talk about just an area where I think the industry could really benefit from a good tech platform, and it would involve using data and potentially some of the other new emerging technology, is things like syndicated loans, right? That process is still fairly manual. Banks have to, get their contracts out, understand who's participating, go through that analysis and push that data out. And it's a very manual intensive process. I think looking at the way that some of the new emerging technologies work, that you can put logic into it, you can get to a much better place much faster using better technology. That's just a small example.
And how do you kind of make sure you stay on top of what kind of fintech solutions there are out there that potentially might be suitable for one of your clients to work with? Do you have any particular sources you scan or keep on top of, or and other kind of networking? And
yeah, so I mean, it's a couple different things. One is, obviously, we're a big firm. We have a lot of folks that work in the space, so it's having us talk to one another. What are all of your clients using? What are you seeing? Second is going to conferences and industry events. Who's there? What types of products and services they have? What are they marketing it? How are they marketing it? Let's do some demos. Let's see the thing actually work to make sure we understand how it works. So when our clients ask us, we can clearly articulate what we've seen and say, look, we're not endorsing anything one way or the other, but we've at least have a working knowledge of how this platform or technology actually works. And then the other one is really going to some of the networking events that are more focused on the tech, right? Is, the small tech meetups and things like that, where people share ideas, they're looking to recruit. There's a couple of people that are looking to build a platform. They could be even looking for investors, and really just go in there with curiosity to listen in and say, hey, what are you doing? Tell me how that works. How are you trying to build it? The last one I say is kind of a weird way to stay, but folks who've left the industry to go to a startup that you know, those are the folks you really want to pay attention to, because they're usually leaving, especially if they leave a large established institution to go somewhere else and they're going to go to a tech startup. They're going for a reason, right? This is a person who built a track record. This is a person who has built a great career, and now they're going to go to a smaller company and try to build something from scratch. Chances are that's going to be a pretty cool something to lure them away from a successful career. So being able to continue those conversations, and when folks kind of leave that ethos that you're used to playing in to go somewhere else, staying close enough to say, hey, I want to monitor what they're doing because I think it's going to be cool.
Yeah, I mean, one of the big challenges for fintechs to work with banks is the fact that they need to move kind of quick because they might run out of money otherwise. So they are willing to take some risk. But obviously the banks are on the opposite end of that spectrum, where they have very little sort of excuse to move very fast. They rather do it safely. So there's almost like a gap there between fast-moving fintechs and slow-moving banks for all the right reasons. How do you think the two worlds will ever meet? Like, is there a way of bridging this gap or making it at least smaller so that more transactions like this can happen?
Sure. I mean, I think you hit the nail on the head, right? Banks, because they're highly regulated, because they need to have that level of public trust, need to move slower and more deliberate. They can sandbox a lot of things, they can demo a lot of things, they can try a lot of things, but to really put it into production takes, significant movement. And that's good, right? Because that's all about consumer protection. But for the smaller fintechs, when they are taking chances, it's for them to prove that they can be effective in the bank's ecosystem. But it's also for the banking partners that they're starting with, especially their pilot, their first, second, third clients, to be able to articulate, here's what we're trying to accomplish and here's what we're concerned about. So here's the risks that we have, here's the regulatory things that come into consideration, here's what we have to comply with. We need to know that what you're building can meet those requirements for us to be able to even consider it. But I do think that the more fintechs that have seasoned banking folks who understand the compliance obligations, those are going to be the ones that get adopted much faster. When you look at a board of a fintech or executive team of a fintech, and you see folks who've got 20 plus years experience, high level roles, understand compliance, and when you go in there and talk to them and they can say, hey, I understand we have to comply with BSA or cybersecurity regs or data privacy, and they start articulating that, you go, oh, well, that gets you much more comfortable because they understand the scrutiny that you're going to be under, and they understand how their platform or program needs to meet your expectations in order for you to consider it. So that, I think, is the biggest gap where, yeah, they can play, to your words, a little bit faster and looser because they're not as regulated as the institutions, but they will be once they start rolling out and implementing at the institutions. They're going to have that pass-through liability because the institution is going to be held to that standard, so they're going to ask their partner to help them meet that.
Brilliant insight, Russell. Thank you very much.